Hello from the For They See Me. This is Chris Robinson with your Trader's Exclusive Comment. Today, the 29th, we're 2 days away. It's Wednesday. On Friday, we've got the USDA report, which we've been waiting for quite some time. How are we set up going into this report? What's the setup? Okay, number one, the funds are short corn. They're short wheat. They're probably short soybeans now. After having been long beans and long corn, they flipped. Them flipping took a lot of starch out of the market. Corn is at 3-month lows. Basically, it's wiped away the entire year's rally that we had in corn. Soybeans, 5-month lows as I sit here today. Not good action. Now, so what are we doing here? Is it going to be a buy the rumor, sell the fact, or in this case, sell the rumor, buy the fact? Are we going to be oversold going into this report? The two things we're going to be watching in the report are going to be the carryout, and we're also going to be obviously looking at the planting intentions to see if farmers did indeed decide to plant more soybeans because of the corn-soybean ratio. The third thing I talk about very quickly is cotton. There's a big relationship between cotton and soybeans, believe it or not. A lot of guys will choose to pick sometimes, especially in the south, in the Delta. No, you've had a hell of a move in cotton. Cotton's at contract highs. It's even if our producers are hedging, they're hedging at profitable prices. That's been driven up by the fact that the managed money decided that they wanted to own physical commodities. It's the one commodity that they've continued to stay long with because they're getting paid. They really don't care so much about anything else as if they're getting paid. So the cotton trade has paid off for them, but it's made cotton very vulnerable to a correction. So if you're a cotton producer, I think you've got to look at taking some protection going into this report in case we have again, a severe pullback. Friday represents opportunity. We are extremely oversold, and the funds are all leaning one side. It's like if Andre the Giant, was sitting in a canoe. Everybody's on the sell side. So it's a natural setup. If there's going to be a surprise, in my opinion, the surprise will be bullish, right? So how do you play that? Well, there's a million different ways to skin a cat, but basically you look for cheap ways with good risk reward where you can catch a move higher. If you don't know what you'd like to do, that's exactly what I do as a risk manager and also as an advisor. I can help you look at good risk reward trades to put something on where you can catch a move. Finally, what's going on with the cattle? That was the big story last week with the Brazilian beef crisis. They were selling tainted beef in a nutshell. They were selling spoiled beef, and immediately that took us up quite sharply in the past 10 to 12 days. You had a really good move in feeder cattle and fat cattle or live cattle if you're looking on the screen. That's given you two things. It's given producers much better prices. It's also given speculators a chance to make a decision. Do you think it's going to continue to rally, or are we set up again for a correction? Now, they did lift the ban. China did lift the ban. 3 or 4 other countries lifted the ban. The EU continues to have a ban on imported beef from Brazil. It's really put the kibosh on the Brazilian economy. So you would have thought that especially after the Chinese lifted the ban, that we'd have a severe correction lower because we rallied on our U.S. cattle rallied on the idea that they're going to be coming for our supply because they can't get supply from Brazil. We haven't seen that severe correction yet. We'll see, I think, moving forward next week, how cattle respond to any sort of gyrations in the corn market. Corn and soy meal, again, they're at multi-month lows. If you're a cattle producer, a rancher, or if you're a hog producer, I think you're doing yourself a disservice if you don't look at going out and getting some cheap upside protection in the form of some call options. Just in case we are bottoming out here in the grains, you don't want to be chasing higher feed costs 4, 5, 6 months from now if you could have spent a little bit of dough today to protect against much higher prices out in the future. So that's about it. This is Chris Robinson. You can look me up on the web. Like I said, if you're looking for help with trade ideas or how to manage the ones you have, that's exactly what I do. So have a great day. We'll see what they say Friday.